Welcome back, everybody, to the Financial Advisors Workshop, a four-star podcast and video series. We are continuing on with another one of the really fabulous financial advisors in our industry that we all can learn from. And we have a gentleman from the West Coast today, David Medina. David is the head of Stewardship Financial. And David is a career changer and a very interesting guy. So David, welcome to the Financial Advisors Workshop.
Well, thank you, Brian. I'm delighted and honored to be here.
Excellent. Well, good. Well, David, I introduced you as a career changer. And the reason I did, because that's an interesting theme. Most of the folks we interview are lifers. They started right after college or whatever, and different models. We see different models among the young folks and then different models among the older folks. But you've got a few years in the industry, in the non-financial industry. Then you come into our industry later in life. Tell us about how all that worked. How did that develop?
Sure. So I spent 25 years in corporate America, 4 years with Procter & Gamble, and 21 years with Avon Products. Avon Products is a name that some of your listeners may recognize and used to be a prominent American company, but fell on hard times. And one by one, each regional facility across the country was consolidated. My facility was announced for consolidation in around 2013. So in 2014, I went to do something different. I was a middle-aged middle manager, exactly the kind of person that corporate America is looking to lay off, not hire. So I needed to do something more entrepreneurial, where my age and experience would be a benefit rather than a liability. And I've always had a great passion for personal financial planning and helping others achieve their goals. So becoming a financial advisor just was the natural transition for me at that time.
Excellent. So how did you get started? Did you launch your own firm and take your exams, or how did this all happen?
Yeah, so I was a career transitioner. I had no licenses. I had no designations. So I felt that I would be best served and best serve my clients if I joined a broker-dealer. So I received offers from Merrill Lynch, Morgan Stanley, and a regional broker-dealer, D.A. Davidson. All of them had branches in California. I made the decision to join D.A. Davidson, which was a smaller firm. I thought it would allow me more latitude to serve my clients. And my 6 years at D.A. Davidson were beautiful. And I worked with a lot of wonderful people, and it was a great experience. Just wasn't my ultimate destination.
Nice, but you did it all out of Pasadena, which is where you are now. Excellent.
Yeah, suburb of Los Angeles.
Right. And we talked about how you're both a BA and an MBA from University of Southern California. How do you think that prepared you for this business, even though you weren't beginning in this business and you came in later?
Yeah, I think education is very important. It's not only what you learn, but some of the habits that you form, some of the contacts that you make, some of the associations that you have. I mean, I am a Trojan. And I also spent a year at UCLA, so I try to play the Bruin card as well. But I think it's very valuable in business development and having connections and having a network. I'm very involved in both the UCLA Bruin professionals and the USC Alumni Association, specifically Encore Trojans. Have a number of clients that hail from both schools. And, when you're in Los Angeles, being associated with USC and UCLA are probably two of the best schools to be associated with.
Oh, no doubt about it. No doubt about it. Well, good. So you spent time at D.A. Davidson, give you a good base. Then you founded Stewardship. So tell us a little bit about that transition and how all that worked.
Yeah, well, while my time at Davidson was fabulous, I knew that eventually I wanted to operate a fee-only firm. And the Tax Cuts and Jobs Act really tipped the scales towards independent contractors versus the W-2 model. So at D.A. Davidson, we are W-2 employees and they treat us great. But given the Tax Cuts and Jobs Act, the elimination of miscellaneous deductions, the elimination of unreimbursed business expenses, et cetera, looking to invest more in my practice, the independent contractor model was going to be more beneficial for me. In addition to that, I do serve two types of clients, my wealth management clients and my qualified retirement plan clients. So I felt that teaming up with a registered investment advisor that specialized in qualified plans would also be beneficial for me. So that's why I'm a member of the Global Retirement Partners Financial RIA.
Okay, so now they provide what for you?
So they provide support, compliance, and supervision. It's a unique structure where technically GRP it operates as Stewardship Financial. So, my disclosure says Stewardship Financial is an SEC registered RIA, but I'm only able to do that as part of Global Retirement Partners, and I utilize their logo on my business cards and other marketing materials.
Their logo as well. Okay.
Their logo as well, yeah. So Stewardship Financial is a cardinal and gold logo, and the GRP logo is navy and white.
Nice, nice, excellent. Well, good. Well, you did leave the corporate world and the Avon world, but you ended up with some activity there and some really innovative plans that we spoke about. Could we talk a little bit about that?
Yeah, thank you. So one of my introductions into the qualified retirement plan space was with Avon. Avon launched a retirement plan for their independent representatives. It's a very unique plan. They said it was the only plan of its kind in the direct selling industry where representatives could save and invest on a tax advantage basis. That plan was launched in about 2001, and I found that there were numerous design flaws in the design and execution of the plan. Each year at my annual review, I would provide suggestions on what needed to be done. And after about 3 or 4 years of providing suggestions and nothing getting accomplished, they said, hey, we have an idea. Let's put you in charge of implementing those changes. So working with the IRS, gaining determination letters to improve tax treatment through Roth and pre-tax contributions, revamped the investment menu to improve diversification, reduce costs, eliminate duplicated funds, add a target date suite, et cetera. And I think we made a lot of progress in that plan. Unfortunately, that plan isn't what it used to be due to the demise or the decline of Avon Products USA.
Avon, right. Well, in that plan, you mentioned you had the plan involved in a special clause for self-employed individuals that were part of the Avon world in a 401A, right?
Yes, yeah. So it utilized part of the 401A code. This was a multiple employer plan before the Secure Act. So it took a lot of innovation on the part of the sponsor, which is the Burke Group from upstate New York, to gain the necessary qualification letters from the IRS. And it was a great plan and it helped a lot of people. Unfortunately, Avon Products is just a shell of what it used to be, and we're actually no longer even an independent company traded on the New York Stock Exchange. Avon is now owned by a Korean firm.
By Korean, yeah, that's a shame. But it gave you an opportunity to do some really innovative, interesting things that are new to us here on the Financial Advisors Workshop as well. 401A is a new subject, and we're glad to hear that. Tell us a little bit more about your practice in general. You have mostly individuals, or is it tending toward more on the corporate side?
Yeah, so the majority of my assets and clients are in the wealth management side. So I'm a certified financial planner and a certified wealth strategist, and I utilize those designations to serve my wealth management clients. But I've also specialized in the qualified retirement plan space. I possess the accredited investment fiduciary, AIF, and certified plan fiduciary advisor, CPFA designation to demonstrate my expertise and knowledge in the qualified plan space, where I tend to work with the small and the micro plan market to help plan sponsors optimize their retirement plan and bring in innovative solutions like cash balance, et cetera.
Nice. Do you manage money as well?
So yes, so I all of my client portfolios are advisor as portfolio manager. I utilize low cost, highly diversified mutual funds and ETFs. So I do not use a TAMP, third party asset manager. I make every trade myself. Part of the reason why I am passionate about that is because I really want to be tax efficient for the benefit of my clients. So, trading individual tax lots and taxable accounts, understanding what clients we may want to sacrifice asset allocation versus what clients we may want to emphasize more tax efficiency. And also my investment philosophy is passive. Rick Ferry, a guy that I don't know if you're familiar with, but he's written a number of books about investing, and he has one of the books is called The Power of Passive Investing. And I just love that phrase. I just think it's such a beautiful phrase and fantastic name for a book. So by emphasizing passive strategic investing rather than tactical investing, I'm able to act as portfolio manager for, over 125 client households.
Nice. Do you have specific models or are they all custom portfolio?
Yeah, so kind of a blend. On one hand, I do not have models. So each client portfolio has the flexibility to be individually different. And that's important to me because a lot of the models will have a 60% allocation or an 80% allocation, but nothing in between. And then, what does that bond portfolio look like? Is it going to be core? Is it going to be core plus, et cetera? So I have typical positions that I use. I utilize SPDR ETFs for equity exposure. I am a DFA approved advisor and I utilize their funds as well. And then I have a suite of different mutual funds I use for fixed income. So, there is a basic structure that I use, but ultimately each individual client portfolio is unique.
You mentioned about passive investing, but you also had mentioned in some of the commentary about evidence-based investing. So talk about that.
Sure. So evidence-based investing is a phrase that's banted around by those that embrace our investment philosophy, which leverages academic research to develop and diversify portfolios. So it's really based on evidence. And we believe that the evidence tends to show that that the efficient market hypothesis should essentially be embraced. So we believe in highly diversified portfolios, low cost. If you're going to try to tilt the portfolios towards factors, you want to do so very cautiously, recognizing that there are things that you can control, like asset allocation, asset location, tax loss harvesting, et cetera. But we really have faith that the evidence suggests that markets are generally efficient and that we need to put our efforts in other areas of wealth management beyond trying to beat the market.
Interesting. That's great. You also, I believe, have 5 wealth management principles, right?
Oh, yes. So when it comes to my wealth management, yes. So my wealth management principle number 1 is stewardship. So recognizing that we must be wise caretakers of the property entrusted to us. Number 2 is wealth management. So I provide value through wealth strategies and holistic financial planning. Clients don't just come to me to manage a portfolio, but as their life evolves as a certified financial planner, I'm able to take that knowledge and implement it for the benefit of the client. Evidence-based investing would be number 3. And, kind of hats off to Rick Ferry and the rest of the team that believes in strategic passive investing. Number 4 is continuous learning. So I remain curious to obtain further knowledge to serve client needs. I'm passionate about learning more and implementing that knowledge for clients. I attend a number of conferences every year. It's one of the things I really enjoy about my business, and one of the things I really hated about COVID. Nothing like being at conferences.
So which conferences did you go to prior to the pandemic? Now they're coming out again, but have you been to any this year?
Oh, yeah. So I've been to a number of conferences already since we've been back. So I've been to Advisor 2X conference, which is led by Ross Marino, which is a conference designed for advisors in the qualified retirement plan space. The NAPA Summit, North American Plan Advisor Summit. It's the largest plan advisor conference in the country. I've been to that. I've also been to a wealth management summit in Phoenix, Arizona, through Titan Investors, where they bring in different asset managers to introduce us to cutting edge investment solutions. And I went to another conference in Nebraska as part of part of Carson Wealth and Financial Independence Group, which is a insurance IMO.
Oh, okay. So that's Carson Wealth's IMO, essentially.
No, so Carson Wealth is partnering. Actually, I take that back. I think they have an exclusive relationship now.
Probably do, yeah. They probably do.
I think you're right. So, so Carson Wealth may exclusively use FIG, but FIG is not exclusive to Carson Wealth.
I see. Okay. Yes.
I don't want to misrepresent any of those other entities.
Okay. Well, it's good to get out and meet people. One aspect of being an independent advisor is often you can often be alone,
Yeah.
and you're a one-man shop as well, right?
Right. So yeah, at this point in my practice, I find that I'm able to manage everything myself. One of the beauties of technology is that it allows us to be more productive. 10, 15 years ago, I don't think I could have done this all by myself, but oftentimes I find that it's easier just to do something myself than it is to delegate it. When I was with DA Davidson, I was blessed with a shared client assistant, and they were all wonderful. But I'm able to handle it all myself now. And then, of course, my final wealth management principle is financial harmony, to align financial decisions consistent with personal values and goals. So really helping the client understand what's important to them and then what we're going to do with their finances to ensure that we're aligned.
Nice, nice. How do you work on client loyalty issues to make sure your clients stick with you? Are there any techniques you use, or you just do a really good job for them?
Well, I mean, I suppose every advisor is going to say they do a good job, and the numbers indicate that clients must be satisfied because overall retention rates in the financial services industry are relatively high.
Yes.
So that's one of the beauties of our business. One of the things that I try to do to try to retain clients is provide services that may be of interest to them. So sending paper newsletters is one of the things that I've done for numerous years. I find that our email inbox is overloaded. So providing something that they can have in hand and carry with them, and pull out when they're waiting for an appointment or something may be of value. Another thing I used to do quite a bit, obviously we've had to put these on hold due to the pandemic, is client events.
Okay.
We used to have client events, within our branch or at a country club. I've even having clients come, some of my clients come to my office. I have a beautiful office here in Arcadia.
You can see the view out the back there.
Yeah. And I sometimes will entertain a small number of clients right here in this office. So, just trying to get together face to face, I think, is one of the most valuable things. And as the economy reopens, I'm looking forward to doing more of that.
So we at Four Star, we're a big fan of events as well, and we try to get as innovative as we can. So let's drill down on that for a second. Tell us about some of your best events.
Oh, yeah. Okay. So I would say the absolute best event that jumps up off the top of my mind was a few years back when we had an event at the Annandale Golf Club.
Okay.
For those in the San Gabriel Valley, they will know that the Annandale Golf Club is one of the finest and most prestigious clubs in our area. And we had a wonderful event there in their clubhouse. We had a guest speaker from one of the asset manager companies who talked about the state of the market and different options that clients should be considering. But just being there and having hors d'oeuvres and having cocktails in such a beautiful environment was one of my favorite events. We did another one at the same place a couple of years later, and one of the things that was kind of fun about that one is it was an indoor-outdoor event. So people could be indoors in the air conditioning, or they could be outside in the sunshine, and just allowing clients to get to know each other, I think, is very valuable as well.
That helps. Have you done any just silly fun events like air and water shows or beach events and movie theater events? Any of that kind of stuff?
I haven't. Maybe it's something I need to reconsider. But I'm a very conventional guy, so I tend to do more conventional events. But I need to open up my mind to some of these things.
Oh no, you don't. I just wondered. No, not at all. Any other like marketing techniques that you use to develop when you started some of this at DA Davidson, and now that you're on your own, let's talk about your marketing evolution of it.
Well, I'd say one of the most unique marketing tools I have is my book, The Right Plan, The Right Process. So there are a couple people in the industry who have promoted the value of financial advisors writing books. One of the guys recommends that a financial advisor write a book for a very narrow audience, like plan sponsors, because you really don't need another investment book for individual investors. But how many books are there for plan sponsors regarding maximizing their plan and benefits? Then another guy said, hey, instead of you just hunched over a keyboard and writing the book yourself, go and interview complimentary experts. So that will accomplish a couple things. One, is you're going to take their knowledge and put it in your book. And then two, you have disciples out there handing out your book.
Right.
So that's what I've done. I've done the right plan, the right process. It's a book designed for plan sponsors and other plan fiduciaries. I interviewed 13 other complementary experts in the industry. Unfortunately, the timing worked out that I had to launch the book in June of 2020.
Oh boy.
Right in the height of COVID. So, I didn't have the launch party I always anticipated. And, it just wasn't the best environment to launch a book, or at least it wasn't what I had in mind. Also, I think the value of the book is most relevant when you're there physically in front of a sponsor and you're able to drop it on the table and it makes a thump and they're able to thumb through it. And there's a lot of things I did with the design of the book that I think make it impressive when you see it in person. But in an online world, it wasn't quite the impact I was looking for. And as we continue to open up, I'm looking forward to refreshing the book a little bit and giving it another go.
So maybe like another edition, even something like that.
Yeah, I don't know if it's going to go far as another edition. I think what I'm going to do is check in with some of my partners, make sure they're engaged. If there's a partner that's no longer really engaged, maybe pull them out and get a replacement. So a minor refresh.
Okay, nice. Well, good. Well, so what kind of marketing do you think you do not want to do that's overhyped?
I don't know if it's overhyped, but I'll tell you one of the primary marketing techniques that I have never done in my career, and I don't think I'm going to start as I approach age 57, is cold calling.
Okay, all right.
I have never made a cold call in my life.
Okay.
Now, I know that there's a lot of successful people that have built their business through cold calling, and A, they may have skills that I don't have, and B, they may have the ability to accept rejection that I don't. I have a very low tolerance for rejection. So the thought of getting on the phone and getting, 19 out of 20 rejections and hangups is something that I absolutely cannot do. And I do think that, in today's environment, cold calling is getting harder and harder. People really don't want to be cold called.
Yeah, it's hard to get through to folks. Yeah, it really is.
It's hard to get through too. So I think it's probably dead. It's always been dead for me, but it was probably dead when I started 7 years ago, and I think it's even more dead now.
Sure.
The other thing that I'm not really a fan of is this excessive LinkedIn solicitation.
Yes.
Which I find very disrespectful and annoying. I am quite active on LinkedIn. I think it's a great platform. I have over 4,000 contacts, and I'm willing to make contacts with almost anybody and trade, share, look at content and all that kind of thing. Mm-hmm. But what I find to be disrespectful and unprofessional and overwhelming my LinkedIn inbox are people connecting with me and soliciting me without getting to know me in the slightest. And I think that's disrespectful, unprofessional, and not profitable.
Yes. Yes. Well, there's upsides and downsides to those platforms. I agree. Well, good. So you got started with your own firm 7 years ago. So let's say you were 4 years in.
Yeah, just to correct, I started in the business 7 years ago. My own firm launched about a year ago.
About a year ago, okay. So you launched it right in the heart of the pandemic.
Yeah, we were still in the pandemic. So my firm was launched in February 2021. Mm-hmm. So we were still very much in the pandemic. But operating as an independent contractor was actually a competitive advantage during that stage of my career. Working as an employee, you are subject to the rules of your employer. And if your employer says that your branch is not open and you are not able to come to the office, then you have to respect your employer because you're just an employee. So from the time the pandemic hit in March of 2020 to the time I departed in February of 2021, my ability to go into the office was limited by my employer. Now, I will say that local management did a tremendous job of following protocols and doing what they can to allow us in, but it wasn't our decision. We had to coordinate that decision with the employer.
Right.
I never saw another client in my employer's branch after the COVID hit.
March 20.
Now, as an independent contractor, paying rent, I'm an independent contractor. As a financial advisor, we are, what's the word? What kind of business? Required business?
We're oh geez, I don't remember either. Essential.
Essential. We are essential workers, essential businesses. So, as soon as I open my doors on February 19th here in this location, if a client wanted to meet with me in the professional and private environment that they deserve in a wealth management relationship, that was now their decision. Where in the past it was my employer's decision.
Right.
So one of the things I really enjoyed about this new phenomenon is that now my clients were empowered to say, David, I want to meet you in the office. I want to close the door. I want to look in your eye. I want to wear a mask. I don't want to wear a mask. But it empowered my clients to make the decision on how they were going to interact with me rather than my employer, who did a fine job. But, when you're an employer and you have, 1,000 plus employees, there are certain, risks that you must mitigate, which you don't have to do when you're a one-man shop.
Of course.
So no criticism to my employer. It's just the flexibility that we have as independent contractors.
Of course. And then launching right in the middle of the pandemic, you had to bring your accounts out of DA Davidson and then bring them over. What kind of challenges did that bring that maybe wouldn't have been there during the pandemic?
Yeah, that's a great question. So not everybody wanted to meet face-to-face. And to be perfectly frank, I don't think I would have had time to meet everybody face-to-face. So, I think about the transitions that people had to go through, 10, 15 years ago before we had the benefit of DocuSign.
Right.
Oh, God help them. The transition went generally well. And I did have the benefit of broker protocol. So, my former firm, DA Davidson, and my new firm, GRP, were both members of broker protocol. So I was able to bring that information with me, which made the transition, much, much easier. And that spreadsheet information was allowed to be taken with me. And then I would say the transition went mostly smooth. I did a tremendous amount of due diligence in selecting my custodian for my wealth management business. I selected LPL Financial as my custodian. I'm not a registered representative with LPL. They're only my RI. They're my custodian for my RIA clients, and I feel that that was a wise decision. Their platform is really built for advisors, and there's not necessarily the disintermediation that could potentially come with some of the other RIA custodians that are spending significant amounts of money every day to disintermediate clients from advisors. So I felt that the LPL platform was advisor-centric, and I really enjoy having my custodian not disintermediate my client relationships.
Yes. So you've left your broker-dealer license aside.
Absolutely. Yes, that is correct. So when I transitioned and opened Stewardship Financial is a fee-only fiduciary firm. My tagline is distinctive fiduciary advice. Mm-hmm. That is a tagline that I'm sure I could not use as a duly registered employee at a broker-dealer. So I did drop my 7, I dropped my 63, and I am a fee-only practice, which is where the industry is moving to.
It really is.
And frankly, it was the only way I ran my practice at DA Davidson. So from a client experience standpoint, nothing really changed. It's more of a function of, how I can promote my practice and how I can declare I am a fee-only fiduciary practice. Because even if you operate it as fee-only, if you're duly registered, you can't say you're fee-only.
Right. So being fee-only, you don't make money on any commissions or anything other than fees. What are your fees? Tell us about your fee structure.
Oh, that's one of my favorite questions. So I benchmark my fees for wealth management clients to be at the lowest 10 percentile in the industry. Okay. My fees are prominently displayed on my website. And the benchmark that I use for my wealth management fees is none other than Michael Kitces. Mm-hmm. So, when you're going to be utilizing a resource in the industry and your resource is Kitces, that data is valid and legitimate.
You're right there. Yeah. You're right there.
So the highest fee I charge any clients that meet my minimum is 0.95%. And I'm proud to work with clients down to $100,000. Then there's a break point for 90 bips at $500,000 and another break point for 80 bips at $1 million. And this is a level fee structure that I'm quoting, not tiered. So if you have $1 million, it's 80 bips on the whole thing, not a certain amount on the first million and then after that. So it's a level fee structure, not tiered, and again benchmarked against Kinsis for the lowest 10 percentile. In the qualified plan space, I do benchmark my fees to be below par because I do believe that fees are erosive to client portfolios and client futures. The qualified retirement plan space has some benchmarking from like Ann Schleck and company, now part of Broadridge, I believe.
Right.
But and that data is maybe not quite as conclusive as Kinsis.
Okay.
So I don't necessarily say I benchmark myself to the bottom 10 percentile there, but I do benchmark myself that to in wealth management.
Nice. Sounds like you really have given a lot of thought to the entire process, and you really a very professional practitioner, and that's really admirable.
Oh, thank you. I appreciate that. I am very thoughtful about what I do. There's a few things that happen to me that were by chance.
So if you had to start over, would you start in your 20s as a financial advisor, or do you think it was better that you waited?
Well, that's a great question. So I have a 23-year-old son, so I suppose I could answer that. I have a 23-year-old son who I think, genetically and environmentally is a lot like me. And he saw me go through this transition, and he's always had a great heart for financial planning and helping others and understanding markets. So he attended San Diego State and earned the requisite education as part of his bachelor's degree to sit for the CFP exam, which he did about 3 months after graduation. And he works as a paraplanner plus at a registered investment advisory firm down in San Diego. So I think it's a great industry if you want to just start out young and you have the opportunity and you have the direction. If you are going to do that, then I think it's probably best if you work in a support role, because I think it's very difficult for 23-year-olds to do business development, especially wealth management business development. Perhaps maybe on the qualified plan space, that'd be a little different. But I think it's hard to convince 50, 60, 70-year-olds to trust a 20-something-year-old with their life savings.
Sure.
But the way the industry has evolved, there's plenty of career paths for young people looking for experience that want to get into this industry and want to learn, want to earn reasonable compensation, and eventually, buy time until they want to start becoming a producer themselves.
Yes, absolutely. Well, and David, we've been through with the pandemic some tough times, and now the pandemic seems to be over primarily, but now the markets and the economy is going through some rough times. We might be going into a recession, and the market's certainly signaling that. But as we know, the market has signaled 10 of the last 2 recessions. So maybe we won't have a recession. We're not sure. So we all learn lessons during tough times that help gird us and lead us forward in good times. What lessons do you think you've learned in these periods that can really help others in the industry and also help clients? Any thoughts there?
Yeah, I think one of the lessons is to not focus on daily, weekly, monthly market moves. I think more wealth has been destroyed by looking at your portfolio than ignoring your portfolio, especially if it's properly invested and diversified. One of the things that I do is I look at my LPL has the ability for us to see how many times a client has logged into their account the past 30 days. So when I'm prioritizing what clients I need to reach out to, I look at those clients that are on the top of the list that are logging into their account every day or multiple times a day, because I know that there's probably some distress going on with them. And I think it's important to have those kind of conversations. The great John Bogle said, create an investment plan, put the statements in a drawer for 30 years, and then open up the last one 30 years later, and you'll be very pleased with what you see. And I think time and time, it gets proven that when things look bad and it looks like, oh gosh, this is going to be the time it's not going to recover, it always has. And past performance is no guarantee of future performance, but capitalism will prevail eventually somehow. And just be patient and ensure that you have a portfolio that be sure that your goals have the luxury of being patient. And if they don't, then you need to have a different portfolio.
Yes. So tough year. How are you guys doing this year?
We're doing. It's a tough year. So when we talk about client portfolios, I'll admit this has been a very difficult period. And what makes it? This is possibly the most difficult period I've been through as a financial advisor. And I think part of the reason why I say that is because, okay, so year to date, prior to today, stocks are maybe down 17, 18%.
Yes.
Okay, I accept that. Stocks sometimes have corrections. Stocks sometimes can, thrust against the 20% bear market threshold. Tell me something I haven't seen. What we haven't seen is not only are stocks down, 17, 18%, but then you also have fixed income down, 10, 11, 12% over a 5-month period. I read something that said this was the worst 5-month period for fixed income since sometime in the 1800s. So client portfolios are really getting hit with both barrels in this market cycle. They're getting hit with, nearly 20% declines in equities and 12% declines in fixed income.
Right.
So it's tough because, when we typically have a bear market in stocks, we at least our bonds, hold steady. And that has not been the case in this market. So, my client portfolios and my own portfolio have taken hits. I'm not going to deny that. But I think by staying a long-term investor will work out just fine. One of the things about fixed income that is true is that they have maturity dates. So, unlike stocks, which is an ongoing concern, and valuation models can vary over time, bonds will eventually pull to par.
Yes.
And that's why I feel like after a 12% decline in the bond market, and based on convexity, I think a lot of the worst is probably over in the bond market, and hopefully it can be a ballast in client portfolios going forward.
Excellent. So as you now continue into your second year as an independent operator, and we always look to make changes, make additions, build new projects, new services into our firm. What are your new ideas for the future? Do you have some new thoughts of how you'd like to take your firm and your practice?
Yeah, so I think one of my objectives in moving was I wanted to try to experience some non-organic growth. The first year of a business is a transition. And I also have a marginally special needs son who has done amazing things in his life. He's now a student at Southern Methodist University. And given the things he's been through, I'm so proud of him, and it's such an enormous accomplishment for him to be there. So I have spent a lot of time and a lot of effort on mentoring him and helping him be successful. So, this past year, through the pandemic and through mentoring my special needs son, that's my youngest son, I think I've had to put a lot of my business growth goals on hold. And it's just kind of reminded me that, business development isn't life development. And
right.
I spent 6 years building this thing from zero as priority number one in my life. And I made this transition, which was obviously a significant task. But I would say that sometimes the growth of the business has to take a back seat to the maintenance of the family.
Of course. Well, and that's the flexibility of an independent advisor. Isn't that right?
Absolutely. Yeah, for sure.
Well, good. Well, this podcast and video series is going to be seen by hundreds, perhaps thousands of advisors over the years. So seeing is such that you have this megaphone to our colleagues in the industry. Is there a message you'd like to send to the financial advisor community?
Wow. Yeah, I think I would. There's one message that that kind of struck me when you said that. There's a cliche in the industry that costs only matter in the absence of value. And I think advisors, especially advisors who are going to consider themselves to be fiduciaries, need to take a good hard look at the fees they're charging clients. I know advisors provide value, and I know that value is substantial, but I also know that our fees are substantial. So I think all of us need to take a close look every day at the fees we're charging clients and to see how we can continuously shave them off to provide greater value. Because value really is, mathematically, value is benefit divided by cost. So anytime you can shave down the cost, you're increasing the value to the client. So when you look at your practice, how much money we're clearing as a practice, do we want to take that incremental $10,000, $20,000, $30,000, and do we want to put that in our own pocket, or do we want to return that back to clients with lower fees? And I don't think there's enough conversation about lowering fees in this industry. And I think it's an opportunity to give back more to clients.
So a true servant leadership model, which is really great.
Yeah, that's what I think. Especially if we're going to say we're fiduciaries, we need to do what we can to reduce the cost to our clients.
Absolutely. Well, great. Well, thank you. This has been a great session, and thank you for sharing everything with us as much as you have. Sounds like you have a great practice. You're off to the races. You have a great life, and we wish you the best. And hopefully, we'll talk again soon. So, thanks again, David, for being with us today in the Financial Advisors Workshop.
Well, thank you, Brian. And then you mentioned my family, and of course, I've been blessed to have my one and only wife, Sherry, for 28 years. Pictures of us are right behind my shoulders. So I have a loving, supportive network that I'm very blessed with. Thank you.
That's what it's all about. Absolutely. All right. Well, thank you. And thanks everybody else for being with us today again on the Financial Advisors Workshop to meet with David. We'll be back again soon with another interview with another great professional like David in our industry. So thanks for being with us today. And we'll be back again shortly with another great episode of the Financial Advisors Workshop.